Crypto Hotep here with another investing video. We are on week 61 of the Family Portfolio and Dividends Tracker. If you're unfamiliar with these videos, feel free to go to week number 1 in my channel. That's where I go through the whole methodology, the strategy, why we're doing this. And basically, in a nutshell, I'm taking you guys on an investment journey with me and my family. We started these videos in February 2024 last year with a couple $100 in the M1 Finance account, and we've built this up. Basically, I created a short list of stocks for my family to choose from. They chose the companies that they most resonated with, and then we proceed to use M1 Finance as our broker of choice, because with M1 Finance, you can create a big portfolio and have sub-portfolios within it. Each one of my family members has a sub-portfolio with his or her own stocks. And then what we do each week is we track this portfolio. We discuss balances, deposits, sells, if we have any sells, dividend activity, dividend reinvestments, and how we're feeling about the market as a whole, just to track that investment journey. But by no means is any of this financial advice. Please do your due diligence and research. And with that being said, guys, we'll jump in. But before we go to week 61, we always go back the week prior to week 60 to see where we were at. So week 60, we were at a balance of $23.29 and 44 cents. We had a money weighted rate of return. We were in the green at 0.81%. Not big, not a big percentage year to date, but we were in the green, and it was good to see because we've had months and months of red return. Market gain of a positive $7.03, dividends earned of $9.09. So what happened this week? Well, this week we went back down. Okay, so we're back in the negative 1.28% with a balance of $23.51 and 80 cents. Dividends earned of $10.46 with a market gain of a negative $36.13. Okay, we're still, if we zoom out year to date, we're still trending upwards. The chart still looks good here, but what actually happened? Okay, so let's see what happened between this week and last week. Okay, so we did have some dividend activity, which is pretty nice. So let's see what the dividend activity we've had. So the dividend activity we had between this week and last week, we had American Express. We had one buy here. I believe we had just $1 left, or $1 in our account, and we got $1 worth of Johnson & Johnson. Okay. Let's go back. We had some more dividend activity of Colgate, Apple, Old Realty, Procter & Gamble, and Costco. And then we had another buy. Looks like we had another $1 in there. And with that $1, we bought Berkshire. So we added a little Berkshire. We finally put some money in the Berkshire Hathaway, even though, again, only $1 here, working with a small account. But we were able to add a little bit in there. So here on the 20th, we did receive another dividend payout from Caterpillar, ticker symbol CAT. And then here is our regular deposit of $15. So again, guys, if this is your first time watching the video, we normally only deposit around $15 or so every 2 weeks. And any extra money, quote unquote, that we're blessed with, we'll put money in here as well. So with that $15, what did we actually buy? So we bought some Berkshire. So we added more Berkshire. We added more Pepsi. Pepsi is down considerably. So we are buying the dip on Pepsi. Apple, Starbucks is also down. Target, which had abysmal earnings, we are buying some Target here. And then Vici Properties. Okay. But as I mentioned, whenever extra money comes in, like with a bonus or anything like that, we do deposit that as well. So we were blessed with a bonus this week of $50. So we made several buys with this $50, and we bought Nvidia, we bought some more Starbucks, bought some more Sony, Amazon, Costco, got some more Target, Berkshire, Celsius, can never have too much Celsius, Apple, and Pepsi. Okay, so we did go buying. We did go buying this week here. And so, as always, guys, let's go to the portfolio. Let's see what's happening on the portfolio. We always go bottom to top. At the bottom in terms of balances is my wife, but she has the most green of any portfolio. So let's click in here. So my wife's portfolio currently sits at $241.25. Money weighted rate of return year to date of a positive 4.63%. Market gain of $7.48. Dividends earned of 46 cents. So as always, Celsius is still holding strong. It's the anchor of the portfolio, up over 42% year to date on Celsius alone. Simply amazing. 15% down. We are in Pepsi. Well, we just bought the dip in there. Tesla, we're actually positive in the green in Tesla. Again, if you've been following this portfolio and following the channel, you know that from the past 2 to 3 months, we have been red on Tesla. We have been down on Tesla over 30% at some points in some weeks. But take a look at that. Up in the green, up over 1.5% now, and back positive. Again, if you invest into great companies with a fantastic outlook and roadmap, you really don't have to worry about these percentages, because if they ever go down, you consider that opportunity to buy, and eventually that company will turn around here. And that's what we're seeing with Tesla. Google, down on Google right now at negative 8.9%, but that's just the point at which we bought Google. Okay. Our middle stocks currently, we are down a negative 4.8%, balance of $259.90. Dividends earned $1.44 year to date, and a market gain year to date of a negative $11.62. Pretty bloody across the board here for our middle portfolio. Negative over 7.5% in Amazon, almost negative 30% in Target. Again, though, Target is a very, very upstanding company. It's been around for decades. I highly doubt Target is going anywhere right now. Up over 10% in Costco, though. Costco is still chugging along. Costco is a very good defensive stock, especially when we have economic uncertainty, recession fears. Costco will still, as I always say, Costco will always Costco. Okay. Starbucks, Tesla, Sony's up over 17%, and then Google, because of the price point and the price basis, we're up over 15.5% on Google. Okay, let's go to our youngest. Our youngest is up a positive 1.53%. Dividends earned of 0.87 or 87 cents. Market gain of a positive $2.84. And that leaves a balance of over $300, $306.49. I know last week I was very happy to say that our youngest had over $300 worth of stocks. It's pretty nice to say. In this week, I should say, Tesla we have down over 5.5%, but we're closing that gap. Starbucks down over 8% in Starbucks. Sony up over 23%. Apple still dipping in Apple, down over 20%. But Costco, again, guys, Costco is being very consistent no matter the portfolio. If you see that, up over 15% on Costco. Okay, Costco's a very, very good stock, very good company. Let's go to my stocks. So currently, year to date, money weighted rate of return of 1.78%, dividends earned of $5.81, with a market gain of a positive $5.97, bringing my balance of over $772. So let's see what we have here. So technology, we did close the gap on technology, which I did like, and I did buy some more NVIDIA here. I bought NVIDIA because I saw it was dipping a little bit, and just, you know, I'm all about AI 100%, and NVIDIA actually got some fantastic news. I believe they got fantastic news today of a big order of AI chips, which is good for their company. Apple down almost 22% on Apple. Apple's not going anywhere. Google, not really worried about that, but positive on Microsoft. Coinbase had a very good week as well. They dip on Friday, as with crypto, but crypto had a fantastic week on the backs of Bitcoin, the king. So whenever Bitcoin pumps, expect coin to do the same thing. Amazon down over 5%. And then AMD finally positive on AMD. This is an amazing sight. AMD has been negative for so long in my portfolio, but we just kept buying dips on it and up, even not up even a 0.10% yet, but it just is encouraging to see some of these stocks turn their heads and become positive here. Meta up almost 7% on Meta. So the tech stocks are slowly but surely closing that gap. Finance up over 2.5% on finance. Industrial and energy, one of my most consistent sectors this year. Always in the green, up over 7.25% here. As we mentioned, the major players like Caterpillar, Waste Management, Duke Energy, Deere and Company, Chevron, and Exxon. Watch out for these two right here, especially with oil going on. Cintas up over 22% on Cintas. Cintas is a sleeper. It is a sleeper, but check the charts on Cintas. It's one of the most consistent stocks. It's literally, for me, I equate it to almost like Costco. Very boring type of company, but if you look at the chart, it's up and to the right forever. Union Pacific down almost over 1.5% there. And honestly, everything looks pretty much consistent here. Not really worried about these down 3%, 3.7%, 2.3. Not really worried about that. Those are small dips here. Those growth stocks, though, whew, man, if only I had more in the growth stocks, which I can increase it, but I won't. But up over 22% on growth stocks alone. And then last but not least, let's go to our Otis. Our Otis is negative in the red, negative 5.44%. Dividends earned $1.88. A market gain of a negative $40.80, bringing our Otis balance to $772.10. Apple, majority of this is because Apple's still dipping right now, and it's still in the lows right here, still below 22%. And then Tesla, just because of the price point, Tesla's down over 10.5%. But again, look back at the videos. Look back at like week 55 or week 56 and check the Tesla positions that we had. They were all in the red. And again, they were in the red over 25%, 30%, 33%. They were down a lot, and it's really good to see that we've made some ground here. McDonald's up almost 9%, and then Costco again, guys. If you're starting to see a trend here, up over 9% in Costco. Okay. So with that being said, guys, our balance for the week 61 of the family portfolio, ended at $23.51 and 80 cents. Bringing the money weighted rate of return year to date is negative 1.28%. Dividends earned of $10.46 with a market gain of negative $36.13. How do I feel about the market currently? I think the reason it dipped on Friday is because we had even more tariffs talks. I believe the tariff scares will go away as Trump and the administration kind of shout out and label these tariffs. The markets are going to get used to it, and they won't mean as much in the future, I believe. But it's good to see the volatility either way. My thought on it is, hey, if we can get another dip, that's fantastic buying opportunity right there. So all in all, I'm very bullish on the market. I feel good about the positions that we have. They're very good companies. And I think it's really hard when you're investing to invest when everything is dumping. When there's so much uncertainty in the world, when you really don't know what's going to happen, and you really feel like taking your money out, that's usually when you should stick with it and buy and continuously buy, and not interrupt the compounding magic that's happening with stocks. It's just going to take a little bit of time for everything to turn around. The funny thing is, people think that stock prices go up forever and they never come down. They have to come down to go back up even higher. And a lot of people don't realize that. But with that being said, guys, we will cut this video short for this week. And as always, but before I forget, please like, subscribe, comment. Let me know what you think in the videos too. That helps a lot. But as always, guys, thank you and happy investing.